any given moment, we have two options: to step forward into growth or to step back into safety. Abraham Maslow. The system is about to be reset. Keep your friends and family aware. Like, subscribe, share these videos.
I would agree that what this crisis is in the process of doing is it is accelerating a lot of pre-existing technological change. So technological change raises productivity generally, and over long periods of time, those gains tend to be broadly shared. But in the short term, that may or may not be the case. And I, along with many others, will leave social media out of it, by the way, in terms of adding to productivity. Not sure I would say that for social media. But for other kinds of technology, I would say it. And in this particular situation, I would worry that the changes, we're not going back to the same economy. We're recovering, but to a different economy. And it'll be one that is more leveraged to technology.
Technology raises the productivity of global and domestic economies. Understand that we are witnessing history. The banking system is a massive Rube Goldberg machine. Today we can remove the frictions of intermediaries, instantly transact transparent systems that are auditable, autonomous systems where trust is not an issue. Quote, "We are not going back to the same economy. We are recovering, but to a different economy."
Here at the Fed and in the United States, we're committed to carefully and thoughtfully evaluating the potential costs and benefits of a central bank digital currency, which we all call a CBDC, for the U.S. economy, for our payment system, and also for the international
The United States is studying digital currencies and analyzing costs and benefits. Central bank digital currencies allow nations to have negative interest rates. Around the globe, debt is unsustainable. And the way we can keep the fiat system running is to take interest rates negative. The more issues in the traditional markets, the closer we are to releasing unfavorable yielding central bank digital currencies, or CBDC. Benefits are enormous for the U.S. economy, for our payment system, for the international front. The tech speaks for itself. And now the Fed is going to analyze it.
We've been actively participating with Andrew and Christine and other central banks at the BIS to look at this, and we feel that's been a very productive collaboration.
We've been actively participating with Andrew at the Bank of England and Christine LaGarde at the European Central Bank and other central banks at the BIS. In this 2017 document, it states that Ripple collaborated with the Federal Reserve and the Bank of England on cross-border payments. The results were positive. The link is in the description below. This has been the game plan for a very long time. The central banks have been testing and studying this technology. Today we have a crisis that requires the use of this technology, and everything is falling into place.
We haven't made a decision to issue a central bank digital currency, and we think there's quite a lot of work yet to be done as we engage with public constituencies here in the United States and around the world before making a decision. Also, the dollar is the world's principal reserve currency, and I assure you that we will approach that question with great care.
The massive amount of debt that the United States owes is a loss of confidence in the U.S. dollar. If the U.S. debt continues its trajectory and increases exponentially, the rest of the world loses their faith when using dollars for trade. The Fed announcing a digital currency means that every nation has the green light for a digital currency, and digital currencies are pressure on the U.S. dollar's dominance. If the United States wanted to keep the world reserve status, they would save confidence by paying off the debt. A CBDC is an instrument to sustain the perpetual debt, not to pay it off.
From our standpoint, the main focus is on whether and how a CBDC could improve what is already a safe, effective, and dynamic domestic payment system. We actually do still have strong demand for cash here, which I think is different than some other jurisdictions. So we really would need this to be done in a way that does not preempt the use of cash or the use of other private digital currencies or non-central bank digital currencies.
The U.S. has had the exorbitant privilege of a world reserve currency. That is why our interest rates are above negative. The more deficit spending, the more debt we accumulate, the more of a need for negative interest rates. Therefore, the more debt, the closer we are to the digital dollar. When the world uses CBDCs, blockchains or cryptos will be utilized on top of the CBDCs. The central banks are not the innovators. They will have a foundation while the innovators will build off of the top of those foundations. These walled garden siloed networks were plugged into the CBDCs.
Private digital currencies or non-central bank digital currencies, such as the Fed Now payment thing that we've announced. The last thing I'll say is, we feel an obligation to be on the frontier of research on technology and policy development on this. But as the main reserve currency, we do feel it's critical that we get it right, as opposed to try to be the first. In a way, we're the incumbent reserve currency, and so we're going to be very careful and engage quite extensively on this before we make a decision.
The pressure is debt. Mr. Powell can say he wants to take the long road, that the Fed will test this forever, but the reality is the debt is a problem, and the private sector is further along. I predict a crisis where the Fed will adopt a platform that the private sector has built.
We're not racing to be first, and we believe that a digital euro will not be a substitute for cash. It will be a complement to cash.
CBDCs on the back end. The banks will be able to transact efficiently while retail use is still cash. They can do this without the public noticing and seamlessly move towards the Internet of Value without a backlash from the public. Remember that the game the central banks and governments are playing has real consequences. One of those consequences is hyperinflation. A great way to protect you and your family from hyperinflation is physical metals. On October 30th, iTrust Capital announced the most technological advanced physical silver IRA. As we move forward, physical metals are going to benefit from reckless monetary policy. iTrust Capital offers IRAs of physical silver with the same tax incentives an IRA offer. Be sure to check them out. The link is in the description below.
And clearly, it's not, it's not a nicety. It's not a tantrum. It is something that, if it is cheaper, faster, more secure for the users, then we should explore it.
The ECB is exploring because they know it's faster, cheaper, and more efficient. That's why central banks around the globe are working with this tech.
If it is going to contribute to a better monetary sovereignty, a better autonomy for the euro area, I think we should explore it. And if it is going to facilitate cross-border payments, which are very laborious in quite a few corners of our big world, then we should explore it.
CBDCs are the domestic settlement rails. The autonomy, the monetary sovereignty are benefits for the states to update their domestic settlement systems with CBDC. Central bank digital currency is a tool for the nations to govern their currencies to see fit. The revised domestic settlement will assist cross-border payments that have been laborious. Central bank digital currency brings jurisdictional ties. The nations of the world want independence from a system that has links to the government and monetary policies of the nation issuing the currencies. Trustless assets are backed by math. The monetary policies are supported into the code. When using digital currency, debt is not a concern. Sanctions are not a concern.
So that's the reason why we have launched a consultation in mid-October that will be completed in mid-January. And at that point in time, we will make the decision as to whether or not we go forward with a digital euro. And my hunch, but this is a decision that will be taken collectively, is that we might well go in that direction.
Completed by mid-January, the ECB is going to announce if they will use a digital euro. The euro is the second most common reserve currency. The second most common currency in the entire world is going to announce in mid-January if they will create a CBDC. Interoperability, automation, AI, vector sets, The problems crypto solves can integrate with CBDCs easier than with a legacy system. The lawmakers will open the books and create laws for central bank digital currencies. A new asset class will be defined. I believe Christine's hunch is correct. The digital euro will be announced in mid-January.
Which does not mean that a digital euro is going to be available right away, because obviously we are going to have to address all the issues of anti-money laundering, financing of terrorism, privacy of users and all the information, the appropriate technology that will carry that digital currency. And this is, a project that will probably take us 2, 3, 4 years.
This is going to be rolled out in stages. There is much work to be done. When she says 2, 3, 4 years, she is talking about the final solution. This will happen on the back end first, and the most significant pain points will be solved first. Crypto is a $500 billion market cap. As they move forward, crypto will move on.
So those are the reasons why we are moving ahead and diligently, not uncautiously. So we will be prudent. We know it will not replace cash, but my hunch is that it will come.
LaGarde knows. She just said it would come. Wholesale on the back end will happen first, and that means cash will still be available. The public won't realize that the system is being reset.
Now, I have to say that I think that means that the bar is set very high for private stablecoins. And I don't think they've met that bar. They haven't met that bar, in my view. And it may be that the answer to that bar is actually central bank digital currency, where obviously you would get that guarantee, that certainty of value would be assured, because that's what central banks provide. Now, that question is yet to be answered, but it is, to my mind, a critical question. But if I could finish, there's a number of other very big questions that follow from that, which are more into the sort of heart of central banking, which is that if you introduce that instrument, how does it affect monetary policy and financial stability? Because it will do. It will do, both in normal times and in stress times. And we need to, we're going to have to do a lot of hard work to think through the implications of that. And we will do. We will do.
The concern is a run on the banks. The banking system is being redefined. The world is changing, and the banks will need to adapt or be replaced. What is necessary to change a person is to change his awareness of himself. Abraham Maslow. Thank you for liking and subscribing. If you enjoy my work, please consider joining my Patreon. Remember to hit the bell for notifications.